morning and welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts, as we get into, wrapping up the first week of May. And, as we've been talking about, unfortunately, for the last few weeks, is that ever since we triggered this money flow sell signal, markets haven't really gone anywhere. In fact, just really stuck here in over the last couple of weeks, just really consolidating that gain that we saw back in March and early April. Not surprising, of course. It was a very, very large gain in March and April, about 5% in total, and that's really led to this consolidation. But we said that at the time when we got this sell signal that likely there wasn't a lot of downside risk because money flows were still positive, but they do continue to decline here. So we are watching that very carefully. And this kind of selling pressure, as well as this decline in money flows, has also certainly lined up with hedge fund selling. We've seen a lot of hedge funds really selling a lot of positions here over the last month, in particular as we head into summer. Don't know what that tells us, but again, it is contributing to the overall weakness here. And again, that does align as well with the MACD sell signal still intact. While markets are looking to turn up just a little bit this morning, not a lot of upside here in the markets here, at least probably over the next few days. Maybe once we get into next week, we'll begin to see a little bit of recovery here. But again, with the sell signal still in place, we're going to wait for that sell signal to turn back into a buy signal before considering, expanding our equity exposure at this point. Again, we're still near full allocations, but we are carrying a little bit of extra cash right now because of this potential sell signal. But one of the things that is interesting here is really looking at what's happening with companies that are really beating earnings fairly well. Profits have been good, revenue's been strong, outlooks not so much. Peloton is a good example of this. Reported decent numbers, but again, outlook for continuing bike sales as people go back to work certainly has not boded well for the price of the stock here. And again, I guess it's easier to cycle downhill at this point. Etsy is another good indication of this as well. Etsy reported exceptionally strong revenue and earnings growth, over the last year because of what was happening with the lockdowns. People had a lot of stimulus to spend. But again, now that stimulus is running out and the economy is reopening back up, people are going back to work. Outlook for that company, not nearly as good. Stock's going to be down about 10% this morning, really trading probably close to or at the 200-day moving average. Again, this has just been a real function of the overall market. Companies have been reporting good earnings because of the issue of expanded net margins, right? With companies being shut down, the work at home, less employees, that has been a huge boost to net margins for companies. Earnings and revenue really not growing all that much, but it's really been the net margins that have been supplying that bottom line beat to a large degree. That's going to start to evaporate as people go back to work. And again, we're talking about people going back to work. We're talking about a recovery, not an expansion. That's going to eat into these net margins over the next couple of quarters. So again, the upside for markets certainly seems to be the case here at the point. But again, as long as the Fed's active here, again, that's providing support for markets. But again, the outlook because of inflation, higher interest rates, and again, reduced earnings margins going forward, that potentially does put some downside risk in markets later on this year. So again, not a lot of upside here, not a lot of downside either. Markets may be stuck here for a bit. So manage your risk, manage your exposure accordingly. And of course, read our weekly newsletter. We'll have that out this weekend, and that's only on the website at realinvestmentadvice.com. Click on the newsletter link to subscribe. We'll email it directly to you when it's ready. Also, you can get all of our YouTube videos, more, our radio show, etc. at our YouTube link. Subscribe there. We'll let you know as well when we publish those. All at the website, realinvestmentadvice.com. We'll see you tomorrow.